gonna have a really, really bad time, sir.
This shit. Hype me up, you're gonna have a real bad time.
Hey, everybody, you're here. You really do love us. You really do love us. You're here. Welcome to another episode of Retireholics. It's an action-packed episode like none other before. Nerdy Chad cannot be here today, but nobody really cares about that. We've got Silent J. We've got everybody's favorite Retireholic Rahab guy. And my name is James Douglas Carlson. I'm coming to you live. This is a truth. I'm not fibbing as I often do. I'm coming to you live from Roswell, New Mexico. But before I explain why, maybe our producer Brandon could play a little clip from the old days to kind of set the stage. Yes? Okay.
Hey. Are you a retirement plan advisor? I got a secret I need to share with you. It's really important that you pay attention to me. If you hear about PEPs, pooled employer plans, you need to know that aliens are behind it. Okay, they're trying to control your mind. Let me show you what I'm talking about. Let me show you. I've been working on something here. So it all started when the spaceship landed back in 1967. But John Sullivan was there, and he hasn't aged one bit. So it's 2020 now. I don't know how many years that is. My math isn't good, but that's freaky, man. And then there was the regs themselves, which are really just a secret alien message about mind control. That's what they want. The FBI, the CIA, the NSA, the KGB, UFOs, they're all behind PEPs. They're all behind PEPs. And then there was the grassy knoll, November 22nd, 1963. Oh, the grassy knoll has nothing to do with this. Never mind. So you need to watch out. They're going to control your minds. They're going to tell you it's about lower fees. They're going to tell you it's about getting rid of your fiduciary responsibility. And the biggest hoax of all, they're going to tell you it's about the retirement plan gap. That's not true. They want your millions of dollars. The aliens do. Watch out. I gotta go.
Well, that guy was very, he saw the future basically because, yes, aliens were responsible for the creation of pooled employer plans. And as I mentioned, I'm here in Roswell, New Mexico on an assignment for the new journalistic arm of Retireholics. I'm interviewing people that have seen and discussed pooled employer plans with these aliens. After my research here in Roswell, I will be heading to Area 51 in Nevada and requesting a private tour of the wing that they have dedicated to these PEP-loving, mind-controlling aliens. So stay tuned. I will bring the truth to the entire industry. Justin, we've got a repeat guest. He's got a buddy with him, not just anybody, an Acrosyn buddy. Please introduce our guest.
Ladies and gentlemen, hold on to your briefs and prepare yourselves for Crazy Carl Part 2. Hailing from the frosty plains of Minnesota, this courtroom cowboy is a plaintiff's class action firm that's got more punch than a Minnesota blizzard. Known for roping in over $300 million for retirement plan folks, Carl's the guy who makes corporate giants like Fidelity and Goldman Sachs sweat like whores in church. And we can't forget about his trusty sidekick, AA Nick. He's a donkey to his Shrek, the meatball to his spaghetti. He's here to take all the acronyms like the fucking champ that he is. Ladies and gents, please welcome Crazy Carl from Angstrom Lee and Nick from I don't know where.
Crazy Carl, welcome.
Thanks so much for having me.
Remember last time you were on, we said Schlichter's nickname was the Boogeyman, and we were trying, what is Carl's nickname? And I remember it was Crazy Carl that we came up with. So I don't know if you've been using that in any marketing materials or anything like that, but I thought it was a good one.
I mean, I haven't. It's also been a nickname given to me 4 times in my life in completely different settings by 4 different groups of people. So I'll take
Sounds
it.
appropriate. Sounds appropriate.
Can I give a little professional update here in terms of where Nick's from? Nick is also from Angstrom Lee. So
what the fuck? I had no idea. Okay, yeah.
Well.
6 months after, we couldn't talk about it at the time, but 6 months after our last appearance, Nick was one of the 5 lawyers that started Angstrom Lee. He runs our railroad practice, which has a DBA of Casey Jones Law. So we
so I didn't want to get
Jones like the Ninja Turtles.
Casey Jones, like the guy in the Grateful Dead song.
Oh, okay. Different generation.
I didn't want to get too self-promotional, but that was obviously a great story since we love Nick from before. I thought, so your firm is not just benefits, then it can blend into sectors like railroads.
So we're we have 2 practice groups. One is retirement, is ERISA class actions, and the other is railroad cases, which involves employment cases by railroaders and guys who get injured at work, or folks who get injured at work.
Because that was Nick's specialty. I remember that back in the day. And I think we should also remind the audience, doesn't he have a mixed martial arts background? And
that's right.
A big deal, right? On like legit, like semi-pro or whatever.
I mean, more like pro. I mean, I'll let Nick talk, but I would say, how many UFC cards did you appear on, Nick?
I left the UFC after a couple fights there for more money, but I was ranked in the top 10 in the world and arguably top 5 for my weight, to be clear.
Good thing we're not doing this show live when I offended him by calling him a minor leaguer.
I feel like I need a
there's
you would have reached over and shown me why he's not a minor leaguer. Sorry, Carl.
Oh no, there's a pretty amazing picture of Nick being walked to the ring by Brock Lesnar and Tito Ortiz cornering him. That and Nick's best friend Adam from law school and one of my really good friends too. So anyways, okay,
one last
very legit.
Well, this is probably not true, but I'll say one last question for Nick on this. Nick, are your ears all fucked up like those guys? You got those crazy ass ears?
Cauliflower ear? I did a pretty good job of draining them. So if you touch them, they're hard as fuck, but they don't stick out.
They don't look like that.
Yeah, I mean, they're warped, but they don't stick out.
I always know when I see those ears to smile politely at that person.
That's right. So wait your turn and
So somehow it came up with my wife one time, who was not around, did not grow up where wrestling was popular or anything like that. And I share with her, like, there's some women who, they're sparse, but like they see the ears and that's a thing for them.
Oh,
it's like nobody likes your ears. They're deformed. I'm like, I'm telling you.
True. That's not true. That's a badge of courage. I think most humans see those ears and know, like, okay, that's an elite level person there that can take everyone down.
I think what he's saying is some women, like, it gets them going, like it turns them off.
Yeah.
You in the right state. So then we're in Iowa one time, and this bar comes up, starts rubbing my ears. I look over my wife, I'm like, fucking told you. You just got to be in Iowa or Ohio or some shit.
Hey, I wanted to talk today about some like new executive order, pulled employer plan. I think we should just stick on mixed martial arts.
Let's talk about ears.
It took 10 years but we finally can talk about sports.
Let's do an official announcement because I know
go team, go sports.
I know Nick does not need these instructions because he was a champ last time and just picked up on it naturally. But we're obviously playing Acrosin. But Nick will be drinking for Carl. And so just to remind you, Nick, any initialism or acronym, but you'll see the little spaceship fly across.
He's already been doing it.
And then you drink. And you're drinking from what today, sir?
I'm drinking a 10 milligram THC seltzer. So
okay, perfect. Perfect. Further clarifying note today for housekeeping here is that for Chapter Champion this week, it will be a battle of 3 challenge. So 3 finalists will be chosen, and that will be Justin, Mark, and I who will choose those finalists. And then they will battle it out in a head-to-head Roby sentence finishing challenge. And then Carl, you will determine who the winner will be. And if you need to phone a friend for Nick, that's fine too. But that is how Chat Bar Champion will go down tonight. Make the semis, go head to head in a sentence finishing Roby challenge. Okay, it's a lucky day for breaking 401k news. We've got some big shit that's straight out of the oven. So BC, I'll drink for that. Set us up for some headlines, please. Wait, let me wash down my shot of vodka with my my screwdriver here. Much better, much better. The big news, anyone who knows 401k knows that today was the day. We all knew this was coming, that our president, Donald Trump, signed an executive order, I don't know, dare I say, clearing the path for crypto and private equity in the retirement plan space. I'm sure it's full of some other stuff too, but that's the stuff that we've been talking about for the last few months. I think we all knew that this day was going to come, but now it has come. Carl, this show is so big time that on my way here driving to Roswell, I got an email from Nevin Adams himself, and he pulled some text from the executive order, which I would like to read to you and then get your general on-the-spot opinion or thoughts or what have you. So bear with me, everybody. This is from the executive order. Burdensome lawsuits that seek to challenge reasonable decisions by loyal, regulated fiduciaries and stifling Department of Labor guidance issued since my first term, this is Donald talking, however, have denied millions of Americans to benefit from investments in alternative assets. A combination of regulatory overreach, this falls into your space a little bit here, Carl, and encouragement of lawsuits filed by opportunistic trial lawyers. Oh, please, that's not our Carl. That's not our
Those
Carl,
are the worst kind.
Those are the worst kind.
I can hear you guys.
Opportunistic
That's
trial
not a
lawyers
cool thing.
have stifled investment innovation and largely relegated 401k and other defined contribution retirement plan participants to asset classes whose returns lack the very same long-term net benefits allowed for and achieved by public pension plans and other institutional investors. My administration will relieve the regulatory burdens and the litigation risks that impede American workers' retirement accounts from achieving the competitive returns and asset diversification necessary to secure a dignified, comfortable retirement. What do you say to this, Carl? There's a lot there.
I guess first of all, I am sorry that I kept everyone from enjoying the benefits of private equity and alternative investments. It wasn't my intention. Now, granted, I have gone on a podcast before and proclaimed that if you put private equity in your 401k plan, that I will sue you. So I guess maybe I kind of deserve that blame. Yeah, no, I didn't expect to be catching strays today, but that is definitely what happened in the executive order. We've obviously been waiting for this for some time. I was surprised at how substanceless it is in terms of what's going to be done. It just says DOL could do something about this to make it happen. And the headlines are like private equity being supercharged by Donald Trump. And the headlines don't seem to match that reality to me. I think that all of this could have happened under the last fiduciary guidance. I don't think that executive order would be, it's not binding in any sense. It doesn't create any kind of like safe harbor or legal path. So in that sense, it's
you're nailing the next question I want to ask you. But I'm starting to learn more and more about this. It's like, just because the government steps in and says that this thing is okay in our opinion, or we give it the thumbs up and approval, you can even lean towards even qualified default investment alternatives. An attorney can still come in and sue you for the use of this thing. So just because the government says, hey, we're cool with crypto and we're cool with private equity, that doesn't stop Schlichter, right, the boogeyman, Crazy Carl from still setting their sights on you in the future, right?
That's right. It doesn't have a role. I mean, in fact, the Department of Labor has historically been incredibly unhelpful or when it comes to litigation involving 401ks. Jerry Schlichter had to do that on his very own in the mid-2000s with really no support from the Department of Labor. And in fact, if you look at the intellectual underpinnings of the Employee Retirement Income Security Act and litigation relating to the duty of prudence,
Nick, he's saving you, Nick. He's saving you.
Keep going. I was going to say.
It was 150, 200 years ago, the judges were saying you can be in United States treasuries, you can be in a bond that's AAA or above, and that's it. In other words, they were would regulate the particular investments that could be used within a trust, and that was the basis for retirement plan, for Employee Retirement Income Security Act. Duty of prudence was that litigation. But in the second restatement in kind of the 60s, 70s is when they adopted modern portfolio theory and effectively did a 180, realizing courts should not be intervening in terms of determining particular investments that is being per se imprudent, or per se too risky. And of course, instead, focusing on risk return profile, getting rid of diversifiable risk. So the idea of the government saying an investment is a good thing or is fine is
well, can I
really all that has never been a particularly relevant until it starts getting into the realm of safe harbors like the qualified default investment alternative. It isn't terribly influential upon litigation.
So I have two kind of follow-up questions we'll kind of wrap the executive order here. But one, do you think that Voya and Empower, because by the way, I saw.
Hold on. Is Voya an acronym?
No.
All right.
Do you think that Voya and Empower would continue their march towards using private equities in their retirement plan solutions if they didn't get this type of executive order? Because one quick point, I saw today on LinkedIn, Voya posted a kind of a promotion of a partnership with Pomona Capital, which is a private equity specialist firm. They've been doing private equity for 20 years. And I'm like, here we go. The day of the executive order goes through, Voya starts waving a flag of, look what we're doing. We've got partnerships here. So my question, which you heard, was, would they still be doing this if this didn't happen?
So my perspective is one from the participants, which is the past 20 years have been an extraordinary win for participants. The goal of financial services companies has always been to get as much of that retirement plan dollar as humanly possible. The drop in investment fees, the drop in record keeping fees has all been contrary to that, and has been not only starting with perhaps Vanguard, its Revolution, etc., have all been amazing wins for participants. And this is just the latest effort of financial services companies to grab a bigger share of that money. And for places like Voya and Empower, whose margins have gotten incredibly squeezed. I mean, Empower started acquiring everybody, think they were in this nice margin business, when instead it turned out it was this incredibly thin business with terrible margins, and no one wanted to own them anymore. So to me, it's a cash grab. And private equity has so many opportunities for you to make money at some level or another. And of course they want a taste of that. I don't really see why Voya and Empower would be so excited absent that.
Yeah, so fair enough. And I think this money grab is going to be a reoccurring theme tonight. Let's before we leave private equity, because I think some of the people in the chat bar would be upset. I saw the person whose name is an acronym, which I can't spell out now, saying, hey, these things are going into managed accounts. And I think that just for the last kind of put a bookend on this, people need to understand that as an industry, I think our goal here is to put this into target date funds as a sleeve, or to put this into managed accounts as a sleeve. And when I say sleeve, I mean a piece of the pie that's maybe, I don't know, 3%, 2%, 1%, who knows? And so can I ask you, Carl, why is that so bad? And wasn't it not cool to put technology funds on a core menu, or healthcare funds on a core menu, or any other kind of specialty sector? I was always taught, like, that's not very prudent to put on a core menu, but if you want to put it in a sleeve at the hands or the disposal of a professional money manager, why not? So are you yay or nay on private equity in those types of vehicles?
I'm nay. And the reason
you're a pussy.
So I think back to 20 years ago. So I listened to the entirety of 2 weeks ago's episode. Great episode. There are some things that I disagreed with in it. And a big one is, you said, what, 20 times fees? There's no way that's right. Maybe it's 5 times. I think 20 times is low. I think the fees, when you consider, when they buy a company and they put themselves on the boards and they pay themselves compensation bonuses within those firms, and not to mention the fact that they give themselves 5 to 10% of the fund to start with for no capital, the fees are astronomical within private equity. The issue is that with a lot of asset classes, they are very attractive and perform well when there is low assets under management. That was the case with hedge funds, but there's only so much alpha. Now is it 4 or 5 trillion in funds currently? They are just buying the same companies from each other, moving from one fund to another. Valuations in private companies are almost at the level of public equities, which is insane, because there's obviously such incredibly, apparent reasons that they're unattractive to own, in terms of liquidity, in terms of, management, in terms of they're not being money that they're funneling to themselves in some way or another.
Transparency.
Yeah, or just synergies, because I'm going to go buy all of my products are now going to come from this other business that the fund owns. Like, the whole only reason that the people that bought Red Lobster bought it is because they also owned a seafood supplier. And so that there were synergies in terms of those purchases. It's like, that's not great returns for you necessarily, although we all love a good cheddar biscuit. But for the investor, I'm not sold. There's also the reporting in terms of rates of return are bullshit.
You would, yeah, right. They can manipulate that stuff. I've read an article all about just that, where it was like,
well, if you invest like 50 million, okay, in it, they make you keep it sit. You have to hold it still, okay, but you have to keep it in something like treasuries, and then they dip into it as they do deals. Guess what? I'm in treasuries. I'm earning 1-2% or whatever, except for the last few years. They don't count that in their returns. They count the returns only on the money that they dip, that they don't even go through until year 5. And so it's like, oh my gosh, our internal rate of return is awesome. It's like, yeah, because you're not counting the 2% when my money sat there for forever, and it's only a 7-year.
Okay. I've been fighting the fight for this alternative asset class, because I just like to see like evolution and something new in our industry. But I don't do this often. The chat bar will back me up on this. You're winning me over. If private equity does not perform and there's no real alpha, there's no real additional performance numbers over the next 2, 5, 10 years, and in spite of that, people are making obscene amounts of money based on these synergies, aka conflicts of interest that are happening that are so deep beneath the surface level that none of us will even ever see it on some type of disclosure thing. Then you win. Like, I'm wrong that this would be a horrible decision, but it's happening. So
I was a financial advisor for 5 years. Very small time in Salem, Oregon, but so I get the appeal of uncorrelated asset classes. There's also some nice appeal of getting able to say what the value is of your holdings and therefore not have volatility quarter to quarter. I get the appeal of an alternative asset class. I really do. I think that the field of defined contribution plans has been these develop. You said 2 weeks ago, JD, are we going to keep giving everyone the same old thing? I was like, please, this has been one of the most amazing. The development of defined contribution plans in the last 20 to 30 years has been one of the most amazing wins for consumers in the US in the past 50 years. please keep giving everyone this low cost equity access to this. I mean, the 401k loans in terms of provision of, the target date funds in terms of diversification. Yeah, it's fucking awesome, and it is the devil to financial services companies. And oh my gosh, the 404A5 and which is not an acronym, that's the section.
I know that.
And the
I feel like it should be.
disclosures.
Yeah,
Is
that
there
was a
gonna be
low
safe
blow,
harbor
Carl.
so
That
that
was
they
a
don't
low
really have to
blow.
Nick
disclose
drank.
our fees?
Carl,
I'm talking too much.
Carl, Justin, and Mark are going to tell you, don't tell us how our fucking rules work. Okay?
Yeah, I'm
We'll
sorry.
let you know when it's an acronym or not. And no, you do need to talk a lot tonight. I actually rewatched the episode that you came on before the other night, and from start to finish. And my one note to myself was, let's let Carl talk more, because you do say great things. Not to kiss your ass, but you say some great things. So let's go on to something that's almost kind of related, and I had not anticipated this. This next headline is from Empower, and they did a recent press release, because Ed Murphy, he loves his press releases these days on their zero fee Standard & Poor's 500 fund and the success that it has had.
Mm-hmm.
Thank you. When this was news several months ago, and we talked about it on this show, and at the time, I was kind of like, oh, this is cool. Like a Standard & Poor's index fund with a 0 expense ratio. And I was kind of, dare I say, naive, where some people were chiming in the chat bar saying, there's got to be some evil doing here. They're not just going to offer something for free. We're in this to make money. This is a capitalist business. And I was like, no, I think you're missing the bigger purpose here. Maybe they just want to drive more business to the record keeping thing. Who knows what? And now Ed Murphy goes out on the internet and says, hey, look at how much we succeeded. I think it was 250 billion or something. Someone checked on the number.
2.5?
Yeah,
2.5 billion, sorry.
Five by the end of the year.
Same.
Close. Yeah.
And so what that said to me was, oh wow, they're getting a lot of their current clients either through promoting to the advisors or promoting directly to the plan sponsors. They're getting people to switch and move to this Standard & Poor's 500 index, which why wouldn't they? It's marketed as a 0 fee. And then I finally, Carl, and this is where I want you to get back on your inspector horse you were just on, like a fee inspector horse. And I thought to myself, 2.5 billion into this fund. Come on, JD. Is there like administrative fees underneath there that are netted out of performance where they're making money? And then I thought, well, wait a second, netted out of performance. This is a Standard & Poor's index fund. This is just supposed to track the market. But then I'm thinking, or track the index, sorry, which in this case is one of our market indices. And then I thought, like, well, what do I know about all these deep, dark boardrooms and how much money they make tracking an index and how much slough they have to spend somewhere else or whatever? But the point is, and I want your expert opinion, because you go after these types of things, is 2.5 billion in a fund like this an opportunity for them to generate revenue that I was just not aware of because the expense ratio is 0? Okay.
I first of all should disclose that
you're suing them.
No, I'm actually weirdly haven't sued Empower yet, but like I've seen the 15C reports from a prominent record keeper whose name rhymes with Schmish Melody, and like there was no secret behind their 0 fee index funds. They were losing a lot of money on them. Maybe it was, I couldn't say because it was more confidential in the litigation. It's just a loss leader. They know that the low fee, that the index funds and the expense ratio at 1 or 2 basis points is.
So my conspiracy went too deep.
What?
My conspiracy went too deep. It's not a moneymaker for them somewhere underneath the hood.
Can I interrupt for a second?
Yeah.
I have a question as Carl's business partner. Did you just get around a confidentiality order by just using a name that rhymed?
I'll
yes.
Yes. I'll use a word that rhymes with yes. So
God bless.
I was going to go back and say I think I read it wrong because there are things not taken into account there. So the first thing that they're probably making money on potentially is securities lending. If they are allowing
As your
securities
lawyer
lending,
partner, I share with you, you have to say allegedly first. Then
Okay.
you can say whatever you want.
Okay. So securities lending is a profitable business, and S&P, the securities in the S&P 500
Oh,
are
not
sometimes
people.
leveraged. So
Bring up
that
yes.
oh darn it. Sorry, Nick. So
Oh no, I have to get more stone.
You're saying that is an opportunity. If they get large market share, that is an opportunity for them to make some money.
But I would also say there's also float, which is that, in other words, anytime you're sending money out of that, you get to earn money off of that. And now that,
but they would have gotten float on a regular fund anyways.
Yeah, I think by and large, like, this is what's so great about for retirement plans is this is a market that works now. In other words, people are actually trying to compete based on offering a better product at a lower cost, which I tell you what, that's not happening in health insurance. It's not happening in healthcare. Like, I'm sure that there are ways that they can make some assets off of having those, having those monies sitting in their accounts, but probably not to anything beyond a break.
You just nailed my crazy thought. I thought maybe they were like, track the Standard & Poor's 500. That's a piece of cake. We got robots and computers to do that. We'll take this 2.5 billion, and in the meantime, go make a bunch of money off of it while we go ahead and track the market and get. But no, I'm wrong. I don't know what I'm talking about. I've never ran a mutual fund. So you said it. You said it's a loss leader, and that's great. That's originally what my thought was. Like, hey, they just want to bring more business.
There are probably ways they are figuring out to make money. There's a lot of instances. It could also be that they have other funds that, even if it's not securities lending, it's that they're acting as collaterals for other things that their other investments are involved in. But Empower isn't. I know they own Putnam, but they're not doing a ton of asset management such that they would necessarily have like hedge funds that they're helping out with it. So I think it might just be that, and really they are like 5 years behind Fidelity in doing this.
Yeah, true. That existed before. Well, maybe people dig a little deeper. I don't know.
Thank you, Kevin. Sorry, I was slow on the Putnam news.
Because I have no idea how an index fund is ran and what that really means internally and operationally, and whether that creates opportunities. I don't know. But I'll go to you, Roby. Do you prefer funds that have a 0 expense ratio or ones that have far higher expense ratios?
I don't
Great
think
answer. Great answer.
I don't think I have a
What's the net?
preference. Yeah, well, I'm looking for performance, buddy. Like, I need to know that it's going to do its job.
Hedge fund, charge me 10%.
I'm okay paying a little bit if it's going to return a good amount.
Carl, Trump's coming out tomorrow with an executive order, and now we're clearing the path for hedge funds in 401k plans. So it's going to be awesome. That comes out tomorrow.
Yeah, that's, you say, oh, we want to do 3 to 5%. I promise you that they are not going to try to limit themselves to 3 to 5%. They're going to try to look like what, for example, the motion picture industry's $8 billion plan looks like, which is more like 60% alternatives. Like, that they are going to say you really should be using private equity instead of public equity.
Because of greed. We jumped back to private equity, but I love it.
I jumped too far. So, and let me, by the way, I totally forgot this, and I can't believe I forgot this, which is that the dividend reinvestment deduction, it's actually a tax credit. And it's one of the insurance company's favorite things, and why they love using annuities as instead of a trust, which is that dividends issued by a fund that they hold as an annuity sub-account, and I think a separate account might work the same way, that those are the equivalent of, there is a tax rule that basically, when you own a subsidiary, they don't want you to have to pay taxes twice. So whatever income your subsidiary makes, since it's assumed that you're paying taxes on that, you get a deduction on that, or a tax credit. Well, but for some reason, they're able to use that same loophole to count the dividends from from a Standard & Poor's 500 fund and deduct that. If you look at the 10K of MetLife, 5 years ago, they had $80 million in tax benefits just from their annuity sub-account business from the dividend reinvestment. Or I'm forgetting the exact I know it as an acronym, but anyways, it's also given that Empower is a life insurance company, there's also probably tax benefits associated with this fund. There.
Carl, can you do us a favor and do Nick a favor? Just speak freely. Like, don't worry about the acronyms. And Nick, the next time you've got someone in a headlock or between your two muscular thighs on the ground, speak some of that attorney language to him, the way you were talking to Carl earlier. Like, be very sophisticated. Like, excuse me, sir, I'm about to stop you from breathing. No, I don't know how to do that. Okay, let's move on.
So the reason that Nick's an awesome lawyer is because he doesn't talk that way and doesn't want to.
Okay.
So that's how he gets. That's how he gets $30 million verdicts against Union Pacific.
Because he's talking plain English.
Allegedly,
because he's
how did that happen?
Because he's
someday
that's not allegedly. Now, because of caps within certain statutes, the client didn't get it. But
I have thoughts someday to build like a 401k show on YouTube where we don't talk in that way as well, and we just kind of play it loose and easy. But I think maybe next year. Okay, let's do something a little different. And I can be quick about this, but Sherry Fitz.
Spin the wheel.
Sherry Fitz not invited me, asked me to kind of. I consider her a friend. I partook in her very first Sway conference, which was 2 years ago, and it was small, it was humble, it was her first one, and I thought to myself, look at this woman who, again, I said is a friend of mine, attempting to create a conference. Like, there's plenty of conferences all over the country, and I almost felt it a fool's mission in a way. Like, I would never stop her from her inspiration and her goals, but I was kind of like, okay, she's going to do another conference. Like, wow, this is going to be very, very difficult to pull off. She goes into year 2. Now she's in year 3. And can we all just for a moment share in Sherry's success? I believe she had 150 people or something at Sway. There's some great pictures out there. 123. Thank you, Sherry. I didn't know you were here. 123 people, and they are all, which would be an attestament to the first two. She runs a very different type of conference, but I won't get into that now. But everyone loved it. They're all obsessed with it. And I'm not here for that. I'm here to say, as a businesswoman, to go 3 years and get 123 people there, she's fast tracking to be next year to be bigger, the year after that to be bigger. Before we know it, she's going to be just like Wealth at Work with a big conference with hundreds of people and tons of sponsors. And I know that's really not her goal or her vision. I mean, she wants to be big, but she wants to keep it the way she's doing it. So shut up, JD. Congratulations to Sherry for fucking pulling off what I don't think a lot of people could pull off. And based on her current marketing and promotion, I think that thing's just going to get bigger and bigger. Freddie B said it better. Napa better watch out, and I'll drink twice.
So you're saying there are conferences where people talk about retirement plans? No, I'm kidding. Yeah. The joke I always make in talking about like how we're in the easiest business ever because 99.9% of the country isn't allowed to own a law practice or practice law. I say, can you imagine if we had to go out there and like design an app? Like, are you serious? Like, we starting that business, like we would be bankrupt in a year. I feel like trying to launch a conference in the 401k or retirement plan space would be roughly as difficult. So kudos.
Yeah, nice work. Thanks. You get it. You get it, Carl. I think that was a big, lofty dream. And just through hard work and her own kind of personality and skill set, she's proved that, hey, Sherry Fitz can do it. So I say congrats to Sherry Fitz. And I'm not just doing that because I consider her a friend. I honestly was kind of blown away by the success. Son of a bitch. I got to kind of clip some of these. I got a lot to talk about. Or we just go Joe Rogan style and just go long. I don't know. Let's go to the next one. Human interest. We've had them on this show. And I title this "Gotta Feed the Beast," And when I mean you got to feed the beast, I mean human interest. I know nothing about these venture capital backed things. Carl, I'd love to know if they're on your radar. But I always think it's funny as a small business person. I was about to call myself an entrepreneur, but then I realized that my daddy gave me the keys to the business, so I don't think it's fair for me to call myself an entrepreneur. Hashtag nepotism. But I think it's funny that that these big firms are constantly in the need of more cash. I need 100 million. I need 200 million. Oh, we're doing great, so I need another 300 million. I think human interest now is up to 750 million. At last check, I'm not sure where their profits were or where that's at, but I don't have much more to say here except for they currently need another 50 million, and apparently
they
more
burn through the 650, or they have a nice coffer and they just got another 50.
They're sitting on the cap. They're investing in private equity. No.
Are they going to be the premier record-keeping provider for Morgan Stanley now going forward? What's the position?
Well, let's also be. Oh no, it's J.P. Morgan Chase. I'll drink. That's in Vestwell. Carl, I don't have anything to ask you about the 50 million. What I want to ask you is guideline, human interest. I hate to say this because I consider Aaron Shum a friend too, but Vestwell, and Vestwell's a little different. Let's focus on guideline and human interest. These are fast-growing venture capital-backed record keepers, never been in this business before, and most of the people that are running the ships there have not and know nothing about you and Schlichter and the history of our industry. Do you think that maybe these people are targets that you might look at and see that they're acting inappropriately?
Am
I allowed to ask?
First of all, say that from I have to put this in a way that
allegedly
I hate guideline. In my not making a statement of fact here, but I think that they suck. That has been our experience thus far. And those are not
or
things
Samson when you need him.
You know Samsonite, right?
So they, I would tend to concur with you. The big.
By the way, their founder, who we've had on this show, Kevin Boosk. I'm obsessed with him. I think he's awesome. But continue.
It was a very attractive offering, and then our fees doubled in year 2. And look, some of this was us in terms of our contributions got all messed up. But let's just say that it hasn't been a great fit. So could they be a target? So the big obstacle and the thing that trips up 90% of people that try to get into, suing folks under the Employee Retirement Income Security Act is fiduciary status, which is someone a fiduciary? And then it's, okay, maybe they're a fiduciary, or were they being a fiduciary when they did the bad thing? That's what the managed account provider is a fiduciary, so we're going to sue them because the fees are too high. It's like, they're not a fiduciary when, road guy's son. Cheers.
Hey, everybody wish him a happy birthday.
They weren't a fiduciary when they set their price, so you lose. So
they're not playing in the investment.
There's not going to be a nexus probably, and
no.
I don't know. It would be difficult to discern, but I'm not going to rule it out. Schlichter found NFP, in their NFP case was a great example of the fact that if you acquire assets, you become a target. What?
Yeah,
NFP is an acronym.
National
Sorry, that was on purpose, Nick. My bad.
Well, sorry, Nick. But it was Vince that won that case against Schlichter. So Schlichter ended up losing that case.
Oh, is that right? I missed that.
Yeah. So Schlichter didn't he struck out on that one, which I thought was very interesting. We talked about on the show. No. Well said. And people said this in the chat bar, so shame on me for bringing it up. I really was more interested in the 50 million that came to human interest, and then I just made up a question off the top of my head. But you're right. They're just fintech. They're a record-keeping thing. They're not involved in investments or trying to get you to invest in their proprietary funds or anything like that. And by most standards of measure, their fees are reasonable. Many times they're even cheaper than current things. So there's less skeletons in the closet with those guys. Fair enough. But can we all just see as a community still, fuck those guys? Okay, let's move on. Oh, go ahead,
I think
Carl.
that there's an abundance of capital on the sidelines in both the private equity and the venture capital spaces, and I think that there's also a fear of missing out that can pervade, that causes that once they hit a critical mass in terms of assets, that it becomes very simple to gather a whole lot of assets because there's in general way more money and way more people than there are good ideas.
Well, and can we also talk about the feather in their cap? It's been a very short time period. It's been 7 years or so since they've really kind of hit the market. And Carl, I don't know if you keep track of these companies, but I mean, they are selling plans by the clip, bro. Like they're in the tens of thousands. I think they're pushing 40,000, 50,000. These are a number of plans that it took legacy record keepers fucking decades to get to.
Right.
Now, mind you, these are all very small plans, you know. So
those plans can get big pretty fast. And so, you know, that is the right end of the market to target. And they seem to get the good entry points in terms of, you know, whether it's, I don't
payroll
know,
integration.
we gravitated towards it very naturally when we were first, you know, getting with our first payroll provider, and it looked better in terms of the fee comparison we did. And so, but I don't know if your numbers take into account the fact that they are on very thin ice with Angstrom Lee LLC. That's all I'll say.
Let's go ahead and spin the wheel of ice.
That's not true. It's in our company name is Angstrom
what does it
LLC.
stand for,
It doesn't
Carl?
stand for anything. It's our company name.
Limited Liability Corporation. Come on, buddy.
I understand that. I understand that Limited Liability Corporation is the statutory acronym, but when I file with the state and I form a company, the letters I use are the letters I use.
Carl,
it's not an acronym for anything.
We will be
I'm sorry.
We will be serving you and Nick in the morning on this very subject. We will see words. If I lose, I'll gladly come.
I love the passion.
Oh, wow.
Oh, fuck, it's all of us.
No, it's Chad.
He's not here.
You got to spin it again.
Let's move on. Okay, fun time of the show, hopefully. I deleted my TikTok, I deleted my Instagram, I deleted my Facebook. It's been probably 4 or 5 months. By the way, I apologize to anyone who follows Retireholics on Instagram because it's gone dark, right? I haven't posted because I'm just not on there. But I do know that there are a lot of people on those platforms. No, Brandon. Oh, Brandon's going to drink. I thought he was about to come on and tell me, I do not have your social media clips. Like, do not promote this section.
You know, I've been sober now for 12 years, JD, and I gotta say, getting iced is like number 27 on the list of things I miss.
Yeah. It's fun. It's definitely fun. We do it every time here. So, I'm
sorry, you were talking about social media.
No, you didn't trail me. I'm too sharp for that. It's called FinTalk. Finance on TikTok. I think we might also have an Instagram reel. But the point of this little segment is, let's see what some of these TikTokies are doing, says Daniela, and then we'll just chat about it. That's supposed to be the fun part. Nick, even you can chime in on this one. Brandon,
even me. What's that supposed to mean?
I had
our was really just
that means
30 houses. 30 houses you can retire with about 400,000 or 500,000.
Oh, do you want that in English?
Yeah.
Did he stop? Is it pause? Sorry, Brandon.
Can you do that again?
I think I messed it up.
Can't hear you, B.
Can't hear you.
Give it another shot.
Okay, Carl was talking, so I stopped it.
Oh, okay. God damn it, Carl.
These were sent with like a commentary on the end of them that's longer. Do you want the commentary?
I want the one where the guy like maximizes the shit that goes longer, where he's like, "Oh, you make an hour a day, I make a second a day, motherfucker." I thought that guy was funny. Did you get that one?
All right.
These came from our team.
My day is 6 a.m. to noon, and I'm not crazy. You're crazy for thinking it takes 24 hours, just like some dude in a cave did 300 years ago. My second day starts at noon and goes till 6 p.m. That's day 2. And then the next day is 6 p.m. to midnight. What I've done now is I have changed and manipulated time. I now get 21 days a week. Stack that up over a month, I'm going to kick your butt. Stack it up over a year, you're toast.
Yeah, my day every minute is a day. So my day starts at 6 a.m., 6:01 a.m. first day. So now what I've done is I've stacked that up and manipulated over time. I've manipulated time. I'm going to kick your butt. Okay? I'm going to kick your butt, dude. Your butt's going to get kicked because I'm having a day every minute. All right? Stack that up over a week. That's thousands of days, you idiot. You're not thinking like me. You're way behind. Your day. What if every day was a second? Did you think about that? Now thousands of seconds in a day. I'm having thousands of days. Dude, I'm kicking your butt. I'm manipulating time. Manipulating time.
My day.
How do you guys at Angstrom Lee Limited Liability Corporation deal with time management? You like these guys? Are they're saying something truthful over there? Or?
Yeah, I don't know what to say other than like I feel like I would bet a honey baked ham that guy's done ketamine within the past 36 hours. That's my comment. Like this guy finds Joe Rogan too tame. I don't know. No, I don't know. We have to track our time. We're fortunate because civil litigation is mostly a tippy tap job, not a yippee yap job. So we don't have to have super intense time management capabilities. Most of the time I'm working on something that's due between 2 weeks and 2 months from now. So yeah, I can't relate to any of that. And and when we started the firm, I was like, no, I'm not going to any meeting that starts before 10. So just so you all know, you can meet. I'm just not going to be there.
You brought up a great thing. Attorneys are one of the last occupations where you're like, oh shit, you're on a time clock. Like when you hire an attorney to do something, you're on their time clock and paying by the hour. We used to do that as third-party administrators. I don't know if you know that, but like when my dad did it in the 70s and 80s, we worked in a very similar fashion. Obviously we don't today, but Justin, any comments about how you might best maximize your minutes, hours, seconds in a day? I mean, does this resonate with you at all?
Fuck no, I'm on Carl's schedule, man. Come on.
Jesus. I learned more and more about the people I pay. Okay, Brandon, we got another one. Let's throw another one up.
Look, let's talk now. I want to hear Nick's view because
I'm going to ask Nick on the next one.
I was going to say Nick has more open cases than the 4 other lawyers in his practice group combined. So his time management skills are insane.
Well, you know what, Carl? This is not your fucking show. It's mine. We're gonna ask
good.
Go ahead, Brandon.
My bad.
I've
overstepped again.
Guys, I have a brand new hack that'll make you a millionaire in 3 days. Step 1, have $100,000. Now you have $100,000. Step 2 is put it in a bank account. And you probably think to yourself, what the heck's a bank account? Well, a bank account is where they bonk your money. And every bonk makes it go up. You're bonking it, and after 2 or 3 bonks, it will turn into $1 million. Step number 3, or draw the money $1,000 out and then $1 million. And now all of a sudden you're gonna think to yourself, I just made $1 million in 3 days from a couple bonks, from just a few bonks. And you're welcome. So follow me for more advice, guys. And remember, always be growing, and don't be afraid to always listen to yourself when you're being yourself.
Nick, my question for you is, I'm going to call this guy the youth. Is with his little stash he's got there. I'm 53 years old now. I'm getting old. Should we be listening to the youth about finance here? Does this guy have any points, or any of these people? Do they even know what they're talking about?
I mean, I like him. He's got a real Tony Robinson vibe to him. I'm digging him. And I mean, I don't know how much longer anything we're doing is going to work anymore, given both AI and Trump. So fuck it. Let's bonk some shit up.
Dude sounds like he's had about 40 of the drinks that Nick's got right now.
Yeah, Nick will drink for his own drink. That's a great point. Artificial intelligence might give us all the strategies we need sometime in the near future. I heard it on rumor that maybe Chat GPT-5 came out today. I don't know if Tony Davis is still in the chat bar to let us know if that is the truth or just something it did.
I heard a statistic, I don't know if it's true, that among Zoomers, they use TikTok search more than Google search.
Oh Jesus Christ. Yeah.
Well,
okay.
I
definitely don't want to be searching for my answers. I have I'm ashamed to say that, not ashamed. I love my I love my 27-year-old daughter, but I have a daughter who always tells me like, hey, this is happening. This happened in the news. Or did you see this? And I'm like, where the fuck did you hear that? And it's literally when she's fucking scrolling her phone. I'm like, that's not real. That didn't actually happen. You need to find an actual news source, which there are.
So I feel like at this point, media literacy, they need to start teaching in third grade. At this point, it's so terrifying in terms of AI and fake.
Dude, just 3 days ago, Chad sent me something that was for sure artificial intelligence, that Phil Collins died, that Paul McCartney came and like sung to him in the hospital or something, and he sent it to me like it was real.
You guys
He's alive.
You guys sent me that Rocky 7 was a movie, and I clicked
on
Chad.
Chad gets duped every day.
All right. Well, I do want to do an extended show, but we're going to leave the TikToks behind. We'll save them for next time. It looked to me like Roby really enjoyed that segment, so I want to build out.
You didn't really say anything, but those are that's good stuff.
Those are
right
good.
There.
Those are good. Those are good. What did I have next on the? Oh shit! Is Freddie B still here? This is this final segment of the show.
So I just saw him post.
It's basically going to be the Freddie B segment. Two great pieces out of him that I think are in classic Freddie B vibe, very controversial or irreverent, or he kind of pokes the bear, if you will. The first one I'm going to go to is the one that you're very familiar with, Carl, because you were quoted in it several times. I sent it to Brandon kind of late, last minute shift, audible. I call it lawsuits, helpful or harmful. Carl, there was some statements in this. I keep hearing from you, plaintiffs' attorneys, that you are somehow responsible for the lowering of 401k fees over the last decade or two. You guys aren't really that big-headed, are you? It's not just your fucking lawsuits that are lower these fees. It's all kinds of things.
Right. And I think Fred did a nice job of pointing out that I made clear that we are a factor among other factors. And there's sort of a chicken egg question, which is that did 401k litigation lead to, Form 5500s being publicly available? Did they lead to the 408B2 and 404A5 regulations, et cetera, which obviously have played likely a larger role than litigation. I think that if you look at what is really happening in a committee meeting, and when people are talking about plans, and in terms of what consultants, advisors are talking about when they try to pitch people on hiring them, and when they're in these meetings, a lot of it is risk of litigation. I think it drives a whole lot of the thinking, and it leads to, well, it can lead to some timid conduct. It also can lead to some very thorough and thoughtful conduct related to selecting service providers, in terms of analyzing performance, in terms of trying to keep expenses low, that has been very positive. Obviously, technology, competition, market forces, et cetera, have worked really well. With that said, fees are dropping within the retirement, within defined contribution plans in a way that I don't think we see in any other sector of the economy. So I'd say, I think that fear of litigation, and that being a palpable fear, one that in which it is realistic, has a really positive, has had a really positive effect.
I like that you mentioned that, in that part of the major fee reduction was in the mega plans, which to me, they're the ones that have the fear of lawsuits. I don't know how much of the small, micro, and mid-market has a real fear of litigation, even if they should. What I think has really empowered the reduction of fees over the last 2 decades has been the kind of evolution of the role of the financial advisor. I feel like 20 years, 25 years ago, a financial advisor was just kind of a dummy that sold a plan and got a commission. And slowly over time and methodically over time, they become a very paramount role and a leader, if you will, a quarterback in helping these plan sponsors. And what does an advisor want to do? Wants to be a client advocate, wants to push record keepers to lower their fees, wants to push people like me to lower my fees, wants to go find the lowest investments they can find. And I think they're really been the push and all this stuff, not you guys and your silly lawsuits.
Yeah, well, there's a lot more of you than there is of me. I mean,
I really mean that. I think your lawsuits
in terms of a per capita impact, I'll take my numbers. But no, look, I'll say when we're looking for cases, if we find a plan without, with 250 million that doesn't have an advisor, doesn't have a consultant, they're relying on the record keeper, that immediately becomes a litigation target. Like existence of an independent, of an independent source of advice, it seems to me to be the best indication of a plan that's unlikely to be breaching their fiduciary duty. So I think extremely highly of the financial advisor, financial consultant community. I think the extent to which they've evolved and become experts in this field since I was doing it over 20 years ago is incredible. Nothing but impressed. I would also say the amount to which people are going to listen to the financial advisor and consultants and care about what they're saying and abide by that is also significantly improved by there being a threat of litigation. So I think it can go hand in hand in terms of whether that message is being listened to. I also think a lot of the forces for consolidation, within the advisor world could very easily replace those advisors with just people who are driving profits and collecting commissions if there's not as much of a fear of litigation.
Yeah, well, we haven't even got to the pooled employer plans yet, so we can talk a bit more on that with those.
Sure.
Let's jump to Aronowitz and leading the Employee Benefits and Security Administration, and kind of what his role might be, and this talk of and I don't have this legal language, I'm sure you do, like a government Department of Labor court or something, versus the private courts. Is that really something that we know that Aronowitz wants to do? By the way, he was supposed to be on this show as a guest and had to back out the last minute. Trump told him he couldn't do it. No, I don't know that. What do you say before you say everything? Hearsay, or what do you say? Damn it. Nick, what was the word?
I usually just say fuck, but
allegedly. I wasn't allowed to share that information. Okay. Aronowitz may do this. You say this, Mr. Clear Speak, Mr. fucking I don't talk like an attorney. You say, quote, this is from Engstrom. This is a profoundly dumb idea. Any benefit from improved sophistication is massively outweighed by the risk of the judicial capture of the ideologues.
Yeah. So in other words, here's an example of that. There are certain judicial districts in which it's not random assignment of cases. There are judges who get really interested in certain areas and are like, ooh, I want the cases assigned to me. And the judges one judge in particular who really liked getting the cases assigned to him was very much what's the word I would use? So, sort of a hardcore free market capitalist type. And it's not that we're not capitalists, but we do believe that fiduciaries should exist and that that you can't completely just trust individual participants to make decisions. And so he was just sort of trying to shape the law and to get it to go in a direction that reduced the level of fiduciary responsibility and allowed people to just give big menus to participants. The point being, when you set up specialty courts, you're far more likely to get ideologues who have agendas than you are to just get expertise and judges who do a really good job. The fact
but Carl, let's go the other side of the coin though, because you're a plaintiff's attorney. Don't you think it's difficult talking to judges and when juries that don't really understand the game of chess that we're playing here? They don't understand the roles and the different things that are happening. I'm constantly frustrated by even our own government and the decisions they make. I can't imagine you being in a court being like, these people don't really understand what I'm trying to fucking talk to them about. So isn't that what Aronowitz is trying to do? Is wouldn't it be great if we had an actual court that is actually knew what a record keeper was, actually knew what 12B1 fees were and sub-TAs I'll drink, and knew what conflicts of interest exist in our industry and understood the motivations of everything?
So I would say that in the course of a lawsuit, a court can learn a lot. And my job is to help educate them about the issues involved in the case. And we have some very complicated cases where we end up with judges who know nothing, who know an awful lot by the end. I think that they make far better judges.
You can't learn in weeks or months what I've learned in 30 years. It's
of course. I mean, JD, of course not. But the
Go ahead, Nick. What do you think about what I just said? Take me to the mat. You can't learn that in court. It's too short of a time period.
That's absolutely right. If you try and learn all the things you're talking about. However, all the regulations are based on really simple principles of, at the end of the day, right and wrong, right? And there's all of these regulations come, or at least in theory, come from a really basic principles. And so a lot of our job, and what Carl does exceptionally well, is takes the very complicated things you guys are talking about and explain to them why these regulations exist and why they're important in a way that's not hard to understand. I mean, at the end of the day, our case.
Carl, he did good. You said that earlier. He did good. It was great to hear from you from outside our industry. You kind of put me in my place a little bit. That's the whole point, is what do the regular people think about this situation? Just normal humans instead of all of us 401k experts. So I get that.
You have, I mean, part of the problem with finance is that the people who know a whole lot are oftentimes ones who are the most wrong. Like, it's the one area where if you want to be successful, just let's say in investment in general, you really have to filter out 96% of what gets said. So, the professors of finance that get up and defend active management in some of these cases are, who are the supposed expert in these cases, are far and away the most like garbage bag useless folks in the entire case. So like, this idea that in
garbage
the area of
bags are
retirement
actually
plans you could
useful.
know more and therefore make good decisions is I don't think I agree with. The thing is, with the judges are also presented with a lot of information that lets them use their common sense. In other words, here's an email that was sent.
That's kind of what Nick said. That's kind of what Nick said. He was talking about common sense. I feel like that was the job.
And common sense alone is not going to help you figure it all out. But when you get to see the advisor giving recommendations, and I get a chance to point out where they were lying, withholding information, or if they just sound like concerned people who care, the judges can pick up on that very clearly. So looking at the evidence or emails of people who do know what they're talking about, I think the judges do a pretty good job of evaluating that and becoming pretty informed.
Okay. All right. Well, let me take this a step further.
Finders of fact.
Let me take this a step further, Carl. On our last show with you, Schlichter was brought up, and you said that he was a leader and the man, and that you would even take a knee to Schlichter at that time. And I'm sure that that's built more around his kind of being novel and coming out and doing a lot of this in a big way first. But I have to tell you, in the podcasts that I've listened to Jerry Schlichter and the writings I've seen from him, the quotes, and he's been on numerous podcasts, he does not, even now, really entirely understand our industry. And he didn't in the beginning days at all. I considered him a noob. When he said shit, it was literally like a beginning surfer coming to the beach. And I'd look at the guy and be like, your leash is on wrong. You're holding your board all wrong. You fucking don't know what you're doing here. And he did not know our industry. Now, he's still done what he's done, and kudos to him. But I have to tell you, Carl, you are way better than Schlichter. You know our shit. You know our industry. You come from it. You understand it. So I say to you, Schlichter should be bending a knee to you, not you to him.
So
we'll move on.
I'll say this. If you wanted to lose a lot of money, I feel like you could remake Aaron Brockovich, but have the story of their lawsuits. He took on 8 figures of debt when he was suing ABB, those firms.
So you respect the entrepreneur. You respect the risk taker, the entrepreneur. Don't tell me Schlichter is a 401k genius, because he's not.
The people there are very good and they understand their cases pretty well, but I get what you're saying. I don't totally disagree. I will say though that whatever knowledge he lacks, he's still 10 times more knowledgeable than a lot of the people bringing 401k suits these days.
That's a sad statement. That's a very sad statement. Freddie B, he knocked me out. That was phenomenal. Nobody knows as much as a third-party administrator. Good for you, Fred.
Yeah, except Fred has to drink because he used the acronym. Or
Yes,
is it not? It's not audience related, or
the good audience members do. Yeah.
Okay.
Wow.
Oh wow,
Okay.
throwing shade at Fred now.
All right. Let's wrap up this last one, which is a big one. The Department of Labor had I just want to sip from my vodka, put out an RFI and a request for information. And Fred did a great job in an article that he posted about pooled employer plans being the wild, wild west. But I would really like to focus, and everyone, if you haven't read that, go out and read this article, wealthmanagement.com/the letters for retirement plan advisor. I don't want to go back to the vodka. Kudos to Fred. This is a phenomenal article. But what I would like to focus on is the Department of Labor and the Employee Benefit and Security Administration's request for information. And I thought it was very telling in that they want to, they're concerned that these things have not taken off the way they should, Carl. Like we pitched to them, I say we, our industry pitched to them, hey, we got this great idea. We're going to be able to really lower costs for small employers, and it's going to be phenomenal. It's called Pooled Employer Plan. Help us get this thing through. And they did it. And the fact of the matter is that pooled employer plans really aren't cheaper than standalone plans, which I think has been a huge headwind for their adoption amongst small plans. I think in Fred's article, he goes on to talk about how currently they're like less than half a percent of total defined contribution assets. And I would just like to state for the record, if you take Aon and Paychex and pull them out of the mix, which are to me just left pocket, right pocket deals, like those are just opportunities that, go ahead, Carl.
And aren't those just MEPs that became
a fair amount of them, but it's also their new
plans? Sorry, Nick.
For someone who doesn't drink and that's been doing really well all show, you sure have a high count.
I know. That's because I've been doing a lot of talking too.
Yeah.
I saw a lot
Not
of
me.
I saw a lot of pro PEP people saying that what they were all excited about, at least what they put on social media, was that there might be this safe harbor for the 338 fiduciary thing. And I just went for a moment to let everyone know, like, really? Haven't pooled employer plans been basically selling based on outsourcing your fiduciary responsibility through a 338 since they started these things? Do you really think it's going to make a difference if there's some type of safe harbor that goes further? Carl, you look like you have a thought, so go.
Well, yeah, the decision to delegate to a 338 makes you just as susceptible to litigation as doing it yourself and doing a bad job. And in some ways it makes you more vulnerable, because if they're self-dealing and you just hand the keys to the car over to them, you're probably as liable as they are. So I don't think it reduces your liability. I'll say, you properly scorned me 3 years ago for saying something pro pooled employer plan when I wasn't really informed. I was sort of speaking. First of all, I don't think anyone should be held accountable for what they say in the last 20 minutes of any podcast. All right, in the podcast.
Well, we're there now. We're there now, Carl. So let it rip.
I didn't know anything. So, like, I don't take any responsibility for my pro pooled employer plan comment. I refuse to. But at the same time, I'll admit I was probably wrong. As soon as I saw Aon's name in that article, it's like, man, I knew I was wrong at the time. I could tell that JD knew a lot more about this than I did. It kind of sucks to be proven wrong that quickly.
Sorry, I apologize. I have a deeper question here on this, though. So you answered the 338 version, and I'm guessing you probably didn't read a lot of the request for information. But it also appears that the Department of Labor is very interested in conflicts of interest. They want to know, like, why these things haven't been adopted, and they also want to know, like, if there's conflict of interest between the pooled plan providers and the investment structure. And so I'm going to take this one moment because I don't have enough time. There's not enough hours in the fucking month for me to talk about pooled employer plans. But I want to put this in front of you, plaintiff attorney, and see what you think about this. And then we'll go to Chap Our Champion. Pooled plan providers, it was the government's idea with this new legislation for the PEP, damn it, when it came up. We're supposed to be this independent new role that would basically keep care of all of this, make all the important decisions about who would be the record keeper, who might be the financial advisor, who might be the 338, who might do the administration, and this pooled plan provider would take on that responsibility. Now, there are a few in our industry that are independent, but Carl, our industry is littered with press releases of record keepers and financial advisors coming out to the world and saying, we are financial advisor, USA across the country. We are partnering with record keeper XYZ, and record keeper XYZ is going to open a PEP with us. I'll drink. And they're going to be the pooled plan provider and the record keeper. And we are going to be the financial advisor and maybe even the 338. Oh, and by the way, the pooled plan provider / record keeper will also be the / administrator. What upside down universe am I living in? How is this even okay? Why are we advertising it to the world? And don't you think that you and your buddy, the boogeyman, are going to want to put their sights on these things when they become $1 billion, $2 billion? Like, this seems ludicrous to me.
Right. I mean, to the extent they're getting away so far, it would be twofold. One is that it's only been 3 years since it started, right? 3.5. So we have a 6-year statute of limitations, and we want all 6 years worth of damages. Okay, so we need 6 years of operation generally before we're gonna go ahead and hit them up. I mean, and also, yeah, the assets and the mass, and it depends on the nature of the wrongdoing, right? So, in 401k world, a plan needs to be, now we recently have been targeting smaller plans because we think that's where the sort of leftover wrongdoing is, or that there's more actual wrongdoing. So 200 to 250 million has been quite fruitful in terms of litigation potentially. But if you're just self-dealing and using your own vehicles, Fred talked about them using their own collective investment trusts within their, I'm not even going to try to get the acronyms right. Then, hey, when you start talking about investment management, you're not talking about a few basis points.
Hey, Carl, we may not seem super smart, but we know what that is. Okay, and also that doesn't count.
I meant it because it's an acronym.
It's not an acronym.
Okay, good. I hate that's awesome. Where there's real wrongdoing, we can sue a plan that's a $30 million plan, especially if you're in like employee stock ownership plan world. So, if no one's taken a super close look at it yet, very few of the players right now in the 401k litigation world are.
Great answer. I want the more general term from you though, the more general thought, which is, isn't that so weird that the government said, so here's what I think is going to happen with the request for information. I think it's possible, everyone's going to laugh at me now in the chat bar, but I think it's possible that the Department of Labor and the Employee Benefit and Security Administration, through this request for information, are about to discover that the pooled plan provider role that they had intended is not what is playing in the market. And instead, because there's a lot of questions there around this, and instead there's a lot of conflict of interest. And here's my final kind of close on this. If you were to prudently, which I think the government should do, make the pooled plan provider be an independent, company, something that's not related to the record keeper, not related to the advisor, I think PEPs, I'll drink, crash and burn. They go away. We'll rarely hear of them again because the only reason they've had, I won't even say success, the only reason they've moved the needle to the minuscule amount they've moved it is through distribution. And the distribution has been motivated through greed, and that's through selling proprietary things. And to your point, Carl, They had lost, all these record keepers and financial institutions had lost the profit margins they had from 20 years ago. And they saw this as an opportunity to grab some of it back. And I think the sun may be setting on this whole concept, Robe Guy and Silent J. And I will be the last one fucking laughing when this shit implodes and they fucking tailspin over their own head.
I hope you're right. But I don't think
we had some litigation against multi-employer plans. I think maybe 2 or 3 lawsuits, and they went very well because there's rife for potential conflicts, and in general, where you see conflicts in the use of proprietary investments, you quite often see decisions not being made in the best interests of a participant. It's just kind of obvious. I mean, to me, again, this is the positive trend in lowering of fees and improving outcomes for participants has been like fighting gravity, that there are these constant forces that are trying to find ways to profiteer and to raise the fees and to hide them. And that's why, did you know Fidelity has one of the 15 biggest 401ks in the country, which is really weird. And a lot of that is because before the 2005 era, they were making so much money hand over fist through exactly that type of conduct that, that they were able to grow so large, and why they own half of downtown Boston. So yeah, I mean, I don't know this area better than I do, but I would say them trying to leverage those is basically them trying to restore gravity, or what they see as gravity, to this world, which is fine, which is keeping more for themselves.
So what I would like for you to make a note of now is that whenever that 6 years goes up or whatever's happening, you and I need to have a conversation, and I need to let you know about all these conflicts of interest that are happening, because compared to the 401k plans you go after right now, and I'm not trying to make this a grandstand here or something, but I'm telling you right now, truthfully, honestly, compared to what you go after right now, this would be like shooting fish in a barrel. This is literally, they're breaking every conflict of fucking interest rule that there is, and they're doing it out in the broad open. And you can literally walk into a courtroom and show them their press releases on this shit, which don't add up and make no sense. So they've literally lost their mind in this greed moment of trying to capture this. And I'm claiming it's all about to implode on itself. But we'll move in. We'll move on.
I didn't know John Sullivan watches this show. I'm not trying to make any press. The heck?
He loves the word fantastic.
Okay.
Do you have our edit? No.
Yeah. Well, I don't like the word specialist.
John, Brandon's wearing a John Sullivan t-shirt. Carl, show him again, Brandon.
Fantastic.
We did an edit of him, Carl and Nick, just so you know.
The rolled up sleeves. I know that picture.
But
how many times does he put himself on the cover?
He uses the word fantastic, and he used to do all these one-on-one interviews, and he did it all the time. So we're drunk idiots. We made a 1-minute montage of him just saying the word fantastic and put it out on the internet. That's when the Retireholics used to be cool, when we were just drunk off our ass doing crazy shit. We've matured. It's unfortunate. Okay, let's play Chap Our Champion. Justin, remember, you vote for a semifinalist, and then Mark.
Yeah.
Go ahead.
There wasn't a lot of zingers tonight.
I don't know.
Fair enough. Be honest with
I
it,
love
bro.
the activity, and it's good to see him back. Mr. Greg Greenfield gets my vote tonight.
Okay, that's an oldie but a goodie. Roby?
So we are not allowed to pick the same person, is what you're saying?
I'd like 3 to go head to head.
Yeah. I'm gonna toss into this ring Mr. William Hackler.
That's a great call, and probably a good potential candidate to win this. I was about to vote for Sherry Fitz just to kiss her ass for her great conference, and then I thought to myself, Sherry can't win this head to head. She's not rude enough. I feel like Rude's gonna win this. So, and Sherry's sitting there right now at home going, JD, why you doubt me? You doubt me on conferences, and now you doubt me on Chap Our Champion. I'm gonna go with David Donaldson.
Good. He was my second choice. Yeah.
Yes, and by the way,
Hey, Michelle says hello. By the way.
Oh, nice. Little secret. I actually love David Donaldson. I think of him many times when I'm lying in bed at night and I can't sleep.
Wow. Oh, wow.
Okay, so road guy.
Hold on a second. No honorable mentions even?
No. You're gonna pick the winner, Carl. But go ahead.
I get that. I was just gonna say I think Freddie B gets an honorable mention.
That's not how this works. This is our show.
Moisiev, sorry if I'm
I
getting
gave him
wrong. And most of all, honorable mention to Nevin Adams, who was too afraid to show up.
Typical lawyer.
We have beef.
Typical lawyer. What a kiss ass. Okay.
I want you guys to know that at meetings, I'm going to use this. When Carl's talking too long, I'll be like, not your show, Carl. Not your show.
Carl, you should really have you should have a show. Like,
I've never seen anyone be able to manage the show and actually run the show over JD. That is bravo.
Hey, Justin, wait till Carl is trying to close on a big case in like 4 years. And the attorneys that's against him is going to go, are you going to listen to this guy who was on this show on YouTube? We have some clips of him right now saying this. No, I'm kidding.
Nick's bet is that at his meetings, when I attend Casey Jones, he actually just mutes me anytime I start doing bits.
Nice. I like that.
Brings me so much joy.
Okay, so here's what I love, Nick and Carl. Here's my thing to you. This has nothing to do with Roby and Justin or Nerdy Chad. First of all, I would be a phenomenal expert witness. I mean, as long as they don't dig into my skeletons in my closet and my history, I think I know 401k better than anyone on this fucking planet. Put me in that courtroom to help you out. I'm kidding. And then secondly, I want to go come hang out in your office and just chill out with you guys. You guys are so awesome. So when it's time to sue the PEPs,
aren't you gonna be there soon?
I'll drink. I'm driving to Minnesota right now.
Well,
my
not
wife
technically.
is from
You're in New Mexico.
Oh, sorry. Wait, I'm going to Minnesota. These guys are in Minnesota.
But didn't you leave like a week ago? How slow are you driving?
There's a lot of nice golf courses I have to play along the way.
Also, if you're in Mexico, I don't think you're taking a very direct route.
Well, no, I got to go through Texas because I wish Chad was here. I'm looking at buying a 20-acre ranch as my second home over there. I'm gonna pretend to be like a hardcore rancher guy. So.
Do they allow Lambos in Texas or no?
What?
Do they allow Lambos in Texas or no?
I will not bring the Lambos.
Christ,
I'll leave
JD, nice flex.
Put some like
20-acre ranch,
big ass mutters on your Lambo to go around the farm.
No. I'll leave the Lambos in Cali and I'll have the big truck in Texas. We know how this all works. Okay.
That's right.
Roby, you got to throw the sentence out, and then those three candidates need to finish your sentence. And who are we dealing with again? Hackler, Donaldson, and Greenfield.
Are they all still here?
I hope so.
Drake's here. Will is here, and Donaldson bailed. Motherfucker.
He loses.
Well, guess who's not winning?
Okay, Sherry. No, she's gone. All right, just fucking those two head to head. Go.
Shit, I should have thought of this earlier. Okay, not a sentence, but how about this? More of a question. To the two people who are in this competition, please let us know what in JD's what was JD's last search on his search bar in Google.
Like, where are you going with this? Yeah, what was my last search? Should I look up the real answer?
Yeah, it was probably can I put mutters on my Lambo? We know that.
Where's my history? I don't even know.
I thought it was pooled employer plans Jeffrey Epstein.
I can't even look at my Google history. I have no idea. How do you kill a map? Ooh, Mark Occhilupo, I like this. We're gonna let everyone play a role here, but Greg's a competitor. He went Mark Occhilupo.
That's knowing your audience right there.
This is a world surfing champion from Australia who is basically second to Tom Curran, would probably be my favorite surfer. Oh, Fred, you had it good earlier when you knocked me down, and then you ruined it You ruin it with a stupid one.
Hackler,
Can we vote
It's probably a good
friends?
thing he was only an honorable mention.
I mean,
So witty
that was
earlier,
good.
and then he just wah 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 with a dumb comment. Who are we waiting on?
Is Hackler still here?
Hackler. He's still here, right?
Hackler, can you just give it? There you go.
What do you do? Can you make an AI of Nick Thompson and Carl? Oh God. Well, it's not up to me. I don't know why.
It's not your best work, Hack. I'm gonna give you that right now.
Carl, it's up to you, and Nick can whisper in your ear if you'd like to. I mean, who's the champ? Because you're going to send them $99 worth of Angstrom Lee LLC merch.
They're going to want the Casey Jones law hats, which are in high demand.
Again.
But we have, you know, but then again, the Yeti is a popular.
Jesus, Nick.
I think.
Hey, it's over.
So
Nick wins. Nick wins.
Wait, I haven't been reading these. I've been focusing on the.
think of Danny, dude. Just think of Danny.
Yeah. Oh yeah.
Oh boy. I don't know. Wait, so who's left?
Carl, stop. I'm going to give you carte blanche here. If people can actually pull this off that weren't in the semis and they deserve the win, then by all means, give it to them.
Yeah, I'm going with Greg G.
Okay, Greg G. Yeah. With I personally, Daniela, Daniela, I think you.
Actually, wait, no, that's right. I'm changing my vote. Daniela Moisi.
No, you can't change.
You cannot change. You cannot. Yeah, that was peer pressure.
No,
he cannot change.
Honestly,
Justin,
my guy wins. My guy wins.
Justin, even Daniela says, "Give it to Greg." Thank you.
Okay. Then,
okay. All right. Let's see.
But look at that. Oh, look at her follow-up.
This is why I'll never be a judge.
That's so good.
Too much of a pay cut.
I won like 50 times. Yeah. Okay. I got a closing. As I was sitting in the car with the two dogs and my wife was driving, I wrote like a closing thing here, but I can't fucking find it. So, thank you. Thank you everyone for tuning in to another episode of Retireholics. Carl, thank you for coming back again.
Yes.
I know that what you do, your occupation has a lot of scrutiny. And so I appreciate your honesty and your authenticity. And then, you know what, I'll tell you this, not that you need advice from me because you definitely don't, but that's what will always win. Be true to yourself, talk like you talk, and you can stand in front of anyone, a judge, a jury, and say, yeah, that's me. That's what I said. That's what I do. I've got no qualms about that. And I'm sure Nick follows that same deal, allegedly. And thank you to you people for tuning in to another episode.
And my response to that,
he's interrupting my fucking closeout.
Okay.
Oh,
your show, Carl.
Go ahead, Carl.
I say I'll be doing it for the first time as lead trial counsel, and the trial starting in 4 weeks. So let's hope your advice.
What is internet?
Holds
true.
I
can hear it. I hear it.
New Mexico internet is shit, dude.
Oh no.
Yeah.
The aliens got it.
Yep.
My internet just
think good thoughts, everyone.
Yeah.
Good luck, Carl. Not that you need it.
Hey,
also start a podcast because you're awesome.
Oh, thanks. Microphone.
If I'm back, which I am, I think my internet struggled. Never be the guy, which I just was, who says, Am I not coming in? Am I pausing? Am I saying? Because if you are, nobody can fucking hear you. Okay, it's been another episode of Retireholics. Thank you, everyone. We will see you next time. I'm too drunk to remember who our next guest is, but Brandon knows who it is. Oh, Wendy Eldridge, a financial advisor who, coincidence, does a lot of shit on TikTok. So we'll be talking to her on the next show. We've got stat guests for the rest of the year. We can't wait to see you for our future episode.
What is it, Justin?
Yeah, on this side of me. Mark's going to be doing the intro. I won't be here. I will be partying with Kevin and Devin. And that rhymes. Like the Del Mar races.
God.
First off, Justin, you don't assign me to a task. I'm not doing the intro. No.
Everyone, We're going to leave you with this. Just remember.
Carl's going to do the intro
for
for us.
For the past 10 years of this show, you know who's always here for you? It's me. I don't miss like these motherfuckers. I'm here. So come see me in 2 weeks. I'll be here.
There's
all right, everyone. Maybe a few. Okay. We are the Retireholics. We are changing the retirement industry.
Thanks, Nick.
One day at a time.
Boys.
Oh God, Nick, I love you. God damn, I love you. All right, Brandon, play some music. Let's get out of here.
See ya.
Peace out.